Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin broke through $95,000. US spot Bitcoin ETFs recorded their strongest day since October with $754 million in inflows, and the Senate advanced sweeping crypto legislation that could reshape the industry. Bitcoin climbed to a two-month high just past $95,000 following favorable inflation data that showed US consumer prices rising 0.3% in December. The data matched expectations, easing fears of Federal Reserve tightening and triggering over $500 million in futures liquidations. Bitcoin is currently trading around $94,733, with Ethereum at $3,283 and XRP at $2.11. US spot Bitcoin ETFs pulled in $753.7 million on Tuesday, their largest single-day inflow in 3 months. Fidelity's FBTC led with $351 million, followed by Bitwise's BITB with $159 million and BlackRock's IBIT with $126 million. Ethereum ETFs added $130 million in net inflows. Corporate treasuries are accumulating Bitcoin faster than miners can produce it. Companies added approximately 43,000 Bitcoin monthly, while miners produced only 13 to 14,000. Strive announced it will acquire Semler Scientific and its 5,048 Bitcoin, bringing combined holdings to 12,797 Bitcoin. Strategy purchased 13,627 Bitcoin in early January, bringing total holdings to 687,410 coins. The Senate Banking Committee released the full 278-page draft of the Digital Asset Market Clarity Act. The legislation would grant major cryptocurrencies including XRP, Solana, Dogecoin, Litecoin, Hedera, and Chainlink the same regulatory status as Bitcoin and Ethereum by classifying them as non-ancillary assets exempt from SEC securities rules. Prediction markets assign an 80% probability the Clarity Act will be signed into law this year. However, the updated Senate draft prohibits digital asset service providers from paying interest or yield solely for holding payment stablecoins. Banks led by the American Bankers Association pushed for these restrictions, arguing stablecoin rewards threaten community bank deposits. Ripple received preliminary approval for an electronic money institution license in Luxembourg. Once fully authorized, the license will enable Ripple to offer regulated payment services involving stablecoins and digital assets across the European Union. Visa partnered with UK-based crypto payments firm BVNK to enable instant stablecoin payouts through Visa Direct. Businesses can now pre-fund payments using stablecoins and send funds directly to recipients' digital wallets, with settlement occurring almost instantly 24/7. Former New York City Mayor Eric Adams faces serious allegations after his NYC Token crashed 81% within approximately 30 minutes of launch. On-chain investigators identified that a wallet connected to the token deployer removed approximately $2.5 million in USDC from liquidity pools near peak pricing, then added back only $1.5 million after the price dropped 60%, leaving roughly $932,000 unaccounted for. Privacy coins surged with Monero hitting a new all-time high above $667, up 54% in a week. Dash rallied nearly 39% in a single day. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.